If you think Rocket Lab already went to the moon and it has to come crashing back down to Earth, I won't make you wait until the end of the video because this thing might shoot past $100 a share next year, and with the upcoming SpaceX IPO, let's figure out if they're setting up to be one of the hottest stocks of 2026 and figure out where we should be buying. Let's go. Real quick, hit subscribe if you're ready to blast off in 2026. I have years of experience working with buy and sell side investors, coming up with price targets and estimates. So if that sounds interesting, these videos are gonna give you a level up in your investing edge. So shout out Aaron and Geeker for the idea on today's video. Keep leaving your comments below and what you guys like to see next. A lot of people are starting to catch on that the space economy is gonna be the next big investment going out until the end of the decade. If we have a look at some market research, we can see that they're expected to grow the industry at around a high single-digit percentage every single year. Rocket Lab is an end-to-end space company, meaning that they provide full launch services, satellite manufacturing, and spacecraft components. They're primarily made up of the space systems revenue line, which you could think of as the payloads and the satellite side of the business, where the launch service is that comparable line of business to a SpaceX. And for reference, they've done about 80 launches over the lifetime of the company, where SpaceX has obviously done a lot more than that. They just won an $800 million contract from the US Space Development Agency, and we should expect bigger contracts for this company going forward as they transition into a prime contractor competing with the likes of Northrop Grumman and other defense contractors. So investors are getting really excited because it's actually increasing their backlog of revenue, and it's consistent with the fact that they're coming out and launching more and more rockets year over year. So the big question going into 2026 is figuring out if the move is already overdone or because of the fact that SpaceX is getting traction and going to have their own IPO, that there will only be more capital flowing into the sector. If we have a look at their year-to-date performance, the stock has done incredibly well. They're up almost 180%, and that's coming off of their recent high that they just put in. And if we compare to a couple other competitors in the space, if we look at something like ASTS, which is SpaceMobile, this is really a comparable line, more or less, to that space system side of the business, more focused on the satellites, but a good proxy and ETF to figure out where a lot of capital is going into the space economy is plotting the ARK Space Defense and Innovation ETF. This is going to be a good basket for a lot of the space stocks that are already available in the public market. That's only up around 60% year to date. So it is really apparent that a lot of the capital is going into the companies that are actually putting things into space. The focus of this channel is to identify high growth setups and how to play them. And Rocket Lab fits that criteria perfectly. If we think about why the stock is up in the first place, they've definitely seen a lot of explosive revenue growth, and that's consistent with the fact that they're transitioning into a prime contractor. We could have a look at the top hand side of the screen, which is their quarterly revenue, and we can see that they've actually gone from doing around $55 million a quarter about 3 years ago, all the way to doing $155 million. Looking at the bottom side of the screen there at the purple chart, they've been able to compound the revenue every single quarter, year after year, at over 47%, which is highly impressive, and that's definitely why the stock has only continued to go up. So the revenue has gone up considerably over the past couple of years, but what are the drivers for them going forward? Well, they're definitely transitioning into launching larger, more reusable rockets in their Neutron segment, at the same time that they're doing a lot of space-focused acquisitions. And another good catalyst for them is they're going to continue to open more launch complexes over the next couple of years. So these are all good reasons to know that revenue, along with the fact that the space economy continues to grow, we'll see more growth over time. A lot of what we just discussed is already factored into the share price as they continue to approach closer to $100 per share. So now we need to determine if that valuation is justified. The way that I'm thinking about this company, because they haven't been able to generate a positive EPS number yet, which we'll get to in a second, is to look at the price to sales ratio on a next 12-month basis. We could see that when they IPO'd, that dropped off considerably. They're trading at 49 times price to sales right now. And I think a good proxy for everybody to always remember is to look at a company like Palantir. And the reason that I'm bringing this up is it had that similar U-shaped recovery in that line in purple there. But as you can see, that Palantir, because they only continue to grow revenue at higher growth rates every single quarter, they've definitely become the gold standard for how to come out of that U-shaped bottom post-IPO and figure out a way to really accelerate their business and actually prove that they do deserve a very high premium. And I'm not suggesting that we should just be focusing and investing on stocks with a price to sales ratio of 100 times, but it is very interesting to consider that if Palantir is able to blow way past the prior peak on their price price to sales ratio on the left-hand side and pretty much almost double it, there is good indication to see that this is what a stock can do in the stock market. And if you think I'm crazy for saying that the top in valuation has not been put in yet, just look at the private valuation of SpaceX. They're trading at almost $800 billion to almost north of $1 trillion right now. And that's compared to Rocket Lab trading at only $37 billion at the time of this video. And for reference, if we actually pull up the quarterly growth rate comparing Rocket Lab in blue to Palantir in purple there, in some instances, Rocket Lab is actually growing faster than Palantir is, and they're actually trading at a lower price to sales ratio, which I know we're aiming for the stars here in terms of reaching that 100 times price to sales. But it is very worthwhile pointing out that if Rocket Lab is actually able to continue to come out with more launches and continue to win bigger contracts, there is reason to believe that a lot of capital might continue to still flow into the stock. But on this channel, revenue growth isn't enough. We need to figure out if that's actually blowing Wall Street out of the water. If we look at the top hand side of the screen, I'm comparing the share price to the revenue beat versus missed history versus Wall Street consensus. And I'm actually very impressed because Rocket Lab has actually been able to consistently beat revenue growth targets over time, with the past 5 quarters in a row actually seeing a positive surprise, with some being as high as a 6% beat. But as the stock continues to approach new all-time highs, I'm a little concerned over the fact that their revenue estimates have not trended up with that over time as well, which could be to a multitude of factors as I'm taking this at face value. But we do know that they actually just won an almost $1 billion contract from the Space Development Agency, and these lines on the right-hand side of your screen are all generally very flat, and they've actually only come off over time, which in a pure top-line revenue growth factor is not a good sign. And if we actually look at their EPS estimates, this is going back to what I mentioned earlier about them still not being profitable, those estimates have actually come off over time as well, and this is just not a very strong sign if you're considering buying at the top here. And that's been the whole story of 2025, as Rocket Lab has been propped up by a very high revenue growth multiple. But we need to look at margins and figure out when they're actually going to be able to turn a profit with all the factors we've already discussed. And I'm actually really interested in what's going to happen with their gross margin. If we look at analyst estimates on the top hand side of my table there, those are only expected to pretty much double out until 2027. And I think a good chunk of that is actually coming from their space systems and satellite payload side of the business. So I'm really excited to see that line grow over time. And if we move down the line here and figure out their EBITDA margin and their EBIT or operating margin, those are also going to continue to see massive growth. And I think if they're able to make a lot of good strategic acquisitions and pull off more launches with more mission success, that's definitely going to contribute to a positive EPS number. Guys, you won't find these takes anywhere else on YouTube, so drop a like if you found the video helpful so far, as we're going to get into the chart next. They've continued to trend up over time above all my key moving averages. If we look at the right hand side of the screen, unfortunately they are starting to form what's known as a broadening top or an expanding triangle, which I'll throw an example on. Especially at the end of a trend, it is a relatively good indication that this might be forming a near-term top, but at the same time, we do understand that there's a lot of good growth drivers for the company going forward. So I'm definitely not suggesting just shorting the stock as it's going to go back to zero, but you are buying after a third push-up at the top of a channel. And if I actually zoom out here as to why the stock even hit this level in the first place, we're going to talk about the concept of a measured move or an extension of the prior trading range. If we have a look at the left-hand side of my screen, all we have to do is measure the size of the prior move, which if I draw a line here and I extend this 100%, that's exactly where the stock topped at around $76 and above. So those are two factors for why there may be a near-term pullback, which you can see last week there was a big bear bar that formed, but we're still above a lot of key moving averages. And realistically, to hit $100 per share, if we think about that price to sales valuation, they're only going to continue to generate more sales out into next year at higher margins. So that does give me a reason to believe that $100 isn't that far off if they're able to pull back, find a mode of support, and potentially see more capital flowing into the sector as SpaceX IPO brings a lot of attention to the space. So let me know if you agree with that take or if you're continuing to buy here, and we're going to follow this stock going into 2026 as a high growth opportunity. Let me know if you agree in the comments, what you guys like to see next, and check out the other stock analysis videos, which you can see on the screen now.